Hello, guys. Welcome to the ValueHunt channel. And today I'm super happy to be here with Chris. He works at Redeye, which is an authority in the serial acquired world. And so I think we have to learn, and we have a lot to learn from Chris and his experience.
Yeah, I mean, first of all, thank you so much for having me. I think if introduction was great. If you want, I can talk a little bit more about my background, etc. But as you mentioned, we have in recent years started specializing among other things on serial acquirers. So um, happy to answer any questions.
Perfect. So yeah, let's jump into the first question, which I actually ask every single of my guests because it's actually super simple but super deep at the same time. And so, who is Christian?
Right. So I guess a short story long. Born and raised in Germany, actually, kind of normal lower middle class family. And the way I came to Sweden was actually I developed an interest in kind of biology, molecular biology, and for some reason I always liked English better than German. So kind of my goal was to do my university studies in English. First, tried to get into some colleges in the U.S., but didn't get a scholarship or anything. So I just searched for any bachelor's program in molecular biology or something related that was taught in English, and randomly found one in northern Sweden. So that's kind of the story how I came to Sweden. And then pretty early on during my bachelor studies, I got like a side job as a warehouse worker, basically, but started saving some money. And then at some point, I was like, all right, I don't want to like spend my saved money on anything, but it would be great if I could, use it and let it work for me. So that's kind of the way I found investing. So in the beginning, I did a short and unsuccessful try at like day trading or anything until I recognized that all right, I'm not that good. And that's kind of how I found as everybody else, Warren Buffett, value investing, stable cash flows, all that stuff. And then fast forward, I did like a master's in biology, and I also like started doing PhD studies in immunology. But kind of always knew that I don't want to work as like a lab scientist or anything in the long term. I want to work in business or with like investing. And then randomly one day I saw a job ad from Redeye. They looked for life science analysts, so primarily biotech, medtech. And I just took a chance and applied. I actually didn't think they would reply, but I actually got the job. And given my background, obviously, I'm qualified as like a biotech and medtech analyst. But in terms of my investment philosophy, it's a lot more, uh, Buffett like, or whatever you want to say. So about 2 years ago, I think, when Nicholas Neri asked me what I want to help them with, covering serial acquirers, etc., I jumped at the opportunity just because that fits a lot more with my personal investment philosophy, so to speak.
That's really an interesting story, and actually, that was what catch my curiosity when I first researched you on LinkedIn, because I saw all these different multidisciplinary, let's say, experience in academia, and I can resonate with that because first, 2 points that I can resonate is that I was trying to look for universities abroad because I really enjoy speaking in English, and I think I actually think in English, which is weird since I live in Portugal. But I was looking into some engineering degrees in Germany, and it's everything is in German, so
Right.
I understand uh, why you wanted to go abroad. And secondly, also, I'm not going for a business degree. I'm going for an engineering degree, and so I was wondering whether you think your unique background gave you any special insights, or was, let's say, a bit of a drag in the beginning because obviously you didn't study accounting and so on in a formal way, let's say. So could you expand on that, especially knowing that there are many people that maybe found their passion on investing, but they have another background, and how they can join such wonderful organizations such as Redeye without having a formal background in investing or business?
Right. So actually, I omitted that detail, but when I was like doing my master's and working as a PhD student on the side, I did like a distance-based MBA. So I studied a little bit of accounting and economics, but as probably most people who studied economics at university can relate to, you basically study most of the stuff for the exams. You pass the exams, you forget everything, and then like once you actually start working, how you do stuff in practice can be different in a lot of cases. Although like studying accounting obviously will be of help, so to speak. But I think the two interesting aspects. If you look at like investing, there are always two sides to like an investment thesis. On the one hand, you have like the objective facts and numbers, and then you have kind of the investment story, right? I think if you have like a more scientific background, you're a little bit more prone to focus on the numbers and the facts, so to speak. So that was quite intuitive for me. When it comes to the softer aspects like management, the story, etc., which are basically equally important in my view. I think there I had to learn a little bit more, even though obviously I had read like a lot of books, so it wasn't like I got a cold start when I started at Redeye. But basically, my way in was I had a biotech background, basically. So when I was doing my PhD studies, I was like an industrial PhD student at a biotech company. And like understanding the technical details in many cases is a lot harder than understanding the financial details. So I think in that way, if you studied something else, you have kind of a certain scientific or sector expertise that can kind of qualify you as a focused analyst on companies in that specific sector. And then obviously it's always a little bit of luck as well. Maybe someone at a relevant company, either on the sell side or on the buy side, or you're just lucky you apply for a job and you kind of match the profile they're looking for. But I would say that having an educational background that's not within finance is probably not a disadvantage. I would say in certain cases it's more of an advantage, just because most of the university studies, if you do like economics, aren't like super relevant when you actually start working in equity research or fund management, etc.
Right. That was actually my feeling. And from anecdotal evidence, everyone I talk to says like they really they didn't got much juice out of the degree.
Right.
And since also the incentives, psychological aspect of it, when you start doing something uh, like when you are forced to do something, I guess that you do it with less passion. And so I really want to protect my passion, which is investing. And so I thought that maybe the combinations of all those facts would make it a good choice. And I also like physics and maths, and
Right.
so yeah. But skipping my personal intricacies, I would like to know a bit more about Redeye, and maybe for the viewers that aren't that familiar with what you guys do, it would be interesting to get a brief description from you, since you are working there and you have an insider view of it.
Sure. So basically, Redeye is like a small investment banking boutique in Stockholm, Sweden. Right now, we're around, I think, 70 or 80 employees, and basically, equity research is at the heart of everything we do. So most of our equity research is commission based. So in contrast to like the traditional sell side model, where the equity research is quote unquote free, but obviously they cover companies because they hope that for some they will get some corporate finance deals or whatever. For most of the companies that we cover, which is around 170, 180 right now, basically the companies pay us as like a service to their retail shareholders, so to speak, and other investors that are interested. So that's the core of everything. Then we also have like a certified advisor department. We have a corporate finance department, and we do a lot of events, among other things, as probably most people interested in serial acquirers have seen. We have the annual serial acquirer conference, which has seen really impressive growth. I think in very rough numbers, in recent years, the number of participants has doubled every year, and it's a really great, for example, networking opportunity in terms of a lot of other investors, a lot of operators that you can meet and kind of discuss, so to speak.
Yeah, that's really cool. And actually, I found out about you guys due to the serial acquire aspect of the business, and so I bet a lot of people find out about you guys in that same way. And so it's really high quality work, and I follow closely what you guys do also in the quarterly reports and the comments you give on the companies and so on. And yeah, it must be a lot of work. That's for sure. Um, and like, since you already talked a bit about the serial acquire conference, I would be curious to know any interesting stories that happened there in the past few years, and what did you learn about thanks to this conference and running the conference. And you're obviously the one of the key people there, since you present the companies and you seem to run a bit the agenda and so on. So I would like to know any interesting stories and what did you learn from this experience so far.
Sure. So, actually, when it comes to the conference, so my main job is, equity research, writing the quarterly update, the quarterly sector update. When it comes to actually organizing the conference, my colleague Eddie Palmgren and also my equity research colleague Nico Savos, they do actually most of the work. Then obviously also our event team. So it's kind of a group effort. I have the at least if looking at my like personal disposition, I like being in a silent room and reading. That role fits me pretty well. But obviously, when it comes to preparing everything for the conference, I also take some part in that. What I would say is that it's been quite surprising, like living in Sweden and looking at serial acquirers. For us, it's kind of a normal thing, right? Because the business model originated here pretty early. I think the earliest, at least one of the earliest, was Bergman and Beving, starting in the 70s or 80s with that kind of model. And that I think that was kind of a critical mass. So not only did you have like an example for other companies to do the same thing, but if you look at several aspects of like Swedish or Scandinavian culture, I think there's kind of a culture of delegating responsibility, right? In other countries, for example, Germany, where I'm from, it's a lot more top heavy. Like the boss makes all the decisions, the hierarchies are taller. So I think the serial acquire model, in terms of decentralization and delegating a lot of the day-to-day operations to local units, it comes a lot more intuitively to a lot of Swedes and Scandinavians in general. And another thing that we've heard is that um, supposedly, I'm not sure whether it's still true, but at least previously, it was a lot easier to kind of buy these small companies in Sweden. If you look at, for example, the United States or the UK or something, the purchasing contract is like 100 pages. In some cases, we heard that back in the day you could have a contract that was like 10 pages or something. So it was kind of like several factors that combined to make this model pretty common here in Scandinavia. And we've gotten in contact with a lot of international investors who focused, or at least were very interested in Swedish serial acquirers, just because the business model isn't that common overseas. And if you do it right, then that's a big if, right? It can be quite attractive business proposition. So once you recognize that there's such a large interest, we saw that there was an opportunity, not just because we were interested in these companies as investors, but also because there wasn't really anyone else trying to help international investors understand the different companies. And I would say it's quite unintuitive in some ways, because if you traditionally look at M&A, a lot of the popular literature says that M&A tends to not be value creative. Usually, companies overpay. The companies that they buy don't perform after transaction. But the way that serial acquirers do M&A seems to work, and that was quite a rich experience in terms of seeing them succeed over decades, right? And seeing that there is a way to do M&A successfully.
Right. Yeah, I guess that is the biggest mental barrier you have to go through if you really want to take an objective view on these serial acquirers, because obviously you have the wisdom of the crowds and so on, but then if you actually look into the economics of these businesses, it's a bit hard to say M&A doesn't work.
Right.
Yeah, it's pretty interesting. Actually, I would like to go a bit deeper on this question, because I just really enjoy like some more personal stories on these events. For example, when the Berkshire meeting happens, I always reach out to my friends that went there and ask them like, oh, who did you saw there, and so on. So it's pretty interesting to me. And I was wondering whether you got to know or found out about a new mentor that you really admire, or someone that you really admire in these conferences, because I know that some really interesting people such as Chris Mayer, which I actually admire a lot, and other investors join you guys in Sweden and actually make the effort to go there. And it's kind of your own mini Berkshire meeting, but
Right.
focused on serial acquirers. So I was wondering whether you have any of these more personal anecdotes that you could share with us.
Sure. So that's a really interesting question in terms of mentors, because I feel like I never really had one mentor at any point in time, in terms of that was really a person who took me under their wing and tried to teach me everything they know. For me, it was always more like I looked at really successful people, and either for talking to them, or in a lot of cases, reading interviews with them or books that they've written or something. I tried to kind of adopt their most interesting lessons, and obviously, for example, at this year's conference, we had Lifco CEO Peval de Machon. We had the previous CEO of Bergman and Beving, Anders Börjesson. He's still like a large owner there, and talking to these people, that's obviously really exciting, just because they're kind of titans of the sector, so to speak. Um, and in general, when it comes to mentors, I would say that one should always be cautious what you learn from them, right? You mentioned, for example, Berkshire, and what kind of happens with a lot of people is that they admire Buffett because he's a great investor, but then they also start asking him about parenting advice. But if you look at Buffett, he wasn't a particularly good parent, because like he wanted to dedicate all this time to investing, which it was his choice. It's fair enough, but I don't think you should idolize any particular person and take everything they say as a given and try to emulate them. I think you should take the best lessons that you can from their successes, and then kind of find your own way, so to speak.
Yeah, that's actually something I learned the hard way,
Right.
because obviously I started this journey of wanting to learn and really being curious about everything around me pretty early on. And so obviously when you're young, I mean, I'm still young, but younger, um, you don't really know too much. And so you just copy shamelessly everything.
Right.
And then you find out that everyone is different, and you really have to listen uh, to yourself and to your body and so on. And this is really curious because since I got that insight, I'm actually more trying to understand where these really intelligent and highly successful people, at least in financial terms, have failed in their personal lives. Because I think that obviously it's common sense that your personal relationships and so on really are the main drivers of your happiness over time. And so I'm really interested in finding out more about the personal lives about of these really interesting people, because most of them aren't as successful as your common person or neighbor and so on. So
Right.
I was wondering on this point, what lessons have you tried to avoid, or like what mistakes are you trying to avoid from these people that from Buffett and like all these people that are really famous for their success, but you really don't want to emulate in your own personal life, because obviously not everything must be copied.
Right. Um, that's an interesting question. Well, I would say like in the first place, when it comes to, for example, family, I think the easy answer is that if you want to dedicate like 100% of your time to investing, don't have children. At least like not too early. If
Yeah.
if you're in your 20s and you want to put 100% of your time into investing, it's probably not a good time to become a parent, just because at least from my personal view, if I'll become a father, I want to be a good parent, right? And I think there's this like inherent conflict. The competition in investing is so high. That there will always be someone who's smarter than you. That there will always be someone who's like working harder than you. Then you can obviously discuss, all right, maybe you just in a lot of cases you just need to work smarter. But in any
Hmm.
case, if you want to dedicate like 100% of your time to something, be realistic about like how much other things you can do, and it's probably not particularly much. And another thing would be that you should always stay humble. I think Buffett was really good at that, but there are other examples of other investors who, for example, value focused ones had really good performance during the 2000s. Then when kind of trend shifted, and maybe growth in GARP was a little bit, or had like significantly better performance during the 2010s, they kind of underperformed, but they always, um, had like a lot of self confidence, and always thought they were right. And in a certain way, as an investor, you kind of need to do that, because you need to have kind of a different view from the market. But it's really easy that once you see like initial success, you think that you're always right. You have like the golden touch or anything. So I think it's always important to stay humble, keep low expectations, avoid, for example, lifestyle inflation or anything, because irrespective of whether things are going to continue to be great, or whether maybe your performance will moderate, you'll still be fine if you don't assume that you will always be like the best performer, etc.
Yeah, that's actually a question that I ask myself a lot. How can I stay humble? Because right now it's pretty easy. I don't know anything, and I haven't achieved anything. But I guess that it's really hard to stay grounded and humble when you, let's say, for a decade have been the best professional in your field, or the best athlete, or the best whatever musician.
Yeah.
So I try to ask this question about how to stay humble to pretty much everyone that I know that has achieved some degree of success. And since I regard you as a somewhat successful people, at least in my standards, what are your strategies in practical terms? Obviously, it's easy to say stay humble, but in practical terms, what do you do to ground yourself and don't really be overconfident? Because obviously, that's one of the psychological biases we have, and it's not the best one in investing. So you have to have conviction, but being overconfident can hurt yourself. So, what are your strategies to stay humble?
Well, I think a natural part of staying humble, at least for me, is that my personal portfolio, not 100% of all, the investments I make work out, right? So I think the an easy thing is just to keep your your losing investments in mind, and that kind of is a quite natural reminder in terms of, all right, not everything you touch will turn into gold, so to speak. Another thing is also, uh, for example, my girlfriend, she's not interested in investing, so I think that it's always helpful in terms of, putting things into perspective. If I talk to like my colleagues or other people interested in investing, they think like, all right, this is so interesting, what still requires. But they're like, the majority of people don't care, right? So I
Yeah.
think it's important to keep in mind that this is like a really niche thing, which, if you do investing right, obviously it has huge rewards, at least in terms of monetary terms. But there are also a lot of people who don't care, who value other things more highly. For example, how nice you treat other people, etc., etc. So that's, I think, um, a pretty good reminder. And in general, when it comes to life, I try to like, as Charlie Munger said, the key to a happy life is low expectations, right? So I try to avoid lifestyle drift in terms of, I'm really happy if I like after I go home from work, if I can like run a couple of kilometers or something. I'm equally as happy, compared to if I would like go golf or like go skiing or whatever. So I try to avoid this lifestyle inflation in terms of, I start doing stuff which costs a lot of time and money, just because other people do it, and especially in finance, there is this kind of peer pressure in terms of, all right, you need to keep up with the Jonases. You need to kind of demonstrate that you're in the right circles, etc. And I always try to stay humble, and I would say like the fact that I grew up in like a lower middle class family helped that a lot, because I've never been used to any fancy stuff when I was growing up, and I think obviously the first, let's say, 18 years of your life kind of influence your perspective on the rest of your life a lot. And I would say in a lot of cases I've seen that it's a lot more difficult for people who already grew up in a rich family, because like their standard to be like probably just as happy as someone from like a less rich family, their standards are so much higher. They need a lot more resources just to be happy, so to speak.
Yeah, I totally agree with you. And drifting is a concept that I also got familiar with thanks to Nick Sleep and the letters to partners from Nomad, the Nomad
Right.
Fund, and I think they talk quite a bit, a lot about that, and I think it's really hard to avoid because obviously these are those small incremental changes that you take, and then when you realize you already have like say a lifestyle that you can't afford, or making like mistakes and so on. So I think that was actually a great answer, one of the most complete I got so far. I got some funny ones, especially from Jake Taylor. I don't know if you're familiar with him,
Yeah,
but
sure.
he told me I have a wife for that, and that's quite interesting. And I also can resonate a lot with your girlfriend situation, because that happens.
Right.
But yeah, now going back and taking a step back towards the more serial acquire world, and going back to investing. Um, I'm really curious to know your thoughts about the all the hype that these serial acquirers have got so far, and obviously that translates into multiple expansion, but also it can translate into more risk, because uh, we see a lot of people on Twitter that maybe aren't that familiar with the fundamentals of these businesses and companies, and don't see uh, these stocks as actually parts of businesses, and they only want to, yeah, to get the the returns, easy returns and fast and so on. So I'm curious to know what are the biggest misconceptions, and whether you think serial acquirers have got overhyped, or there's still room for making good investment decisions within this field if you play the game right, so to speak.
Right. So I think let's start from the beginning here. Why attractive businesses? If you look at most serial acquirers, for like simplicity, let's say they buy companies for 6 times EBITDA. If you just assume that earnings will stay constant, that gives you a return of around 16, 17% on the money that you've invested in the acquisition. And that's, a decent return. But let's take Lifco as an example. Their return on capital employed, as reported, is around 23% right now. If you exclude goodwill and intangibles, it's far above 100%.
Right.
So, in theory, you would get higher returns if you could make investments in organic growth at the same returns. Um, so it's like not immediately obvious why this is an attractive business model. But the thing is, if you buy a lot of small niche companies, like usually the size of that niche is limited, there are barriers to entry. The niche doesn't grow that much, and the companies are relatively small. So there isn't that much room to grow. It's not that attractive for new competitors to enter just because the investment needed to kind of break into the niche can't really be motivated by the potential reward, given that like they're already entrenched market players. So if you look at like the returns on M&A that these companies get, at least disregarding potential organic growth, it's not like super high. But if you buy the right companies, like the right niche companies, for example, the risk reward is quite good, because a lot of these companies, their sectors won't change that much, etc. So they have pretty reliable cash flows. They can organically grow in line with inflation, maybe a couple of percentage points above inflation. So this is a pretty repeatable process. So it's an attractive, risk reward. And given how many like small and mid-sized enterprises there are in just Europe, there's a really long growth runway, at least if you can scale your M&A volume. As we touched on a little bit before, I think like, for example, 10 or especially 20 years ago, a lot of people didn't really understand that business model. They kind of lumped it into, all the unsuccessful large M&A deals that usually end up, in on the first page of the newspaper or anything. So, like the last 10 years, especially, investors in several serial acquirers, for example, Lifco, VTech, Lowerkrans, they not only got good returns because these companies posted really impressive earnings growth, they also got significant returns from multiple expansion. I would say at the current levels, especially since, like, for example, last October, we've seen a really strong rebound in valuations. At current levels, I would say that you probably shouldn't expect multiple expansion over the next 5 to 10 years. So it's primarily going to be earnings growth that's going to drive share price appreciation. And if you want to be a little bit conservative, you can probably underwrite a little bit of multiple contraction, actually. I wouldn't say that there are a lot of companies that are obviously overvalued, at least in the long term. I think if you draw out some reasonable estimates for example, 10 years, I think a lot of the valuations will look somewhat reasonable, even if you just for, there's some execution risk. But obviously, whenever companies traded like quality or GARP multiples, let's say like EV EBITDA 20 or 25 and PEs of 30 to 40, that kind of presumes that everything, or like a lot of things, will go well during coming years. And in terms of, if there are any hiccups, that you probably have some considerable multiple contraction risk. And if your investment horizon is actually 10 years, you probably don't care. But saying that you have an investment horizon of 10 years and then actually sitting through, for example, a 50% drawdown are two different things. So I think everybody should be at least aware that, if a company trades at PE 40, there's nothing to say that it will trade down to P20 if the current economy turns badly. Maybe they end up having a couple of bad quarters consecutively or something. Um, so in general, I think as the interest for serial acquirers, the Swedish serial acquirers, has grown in like the last 10 years, and more international capital, including like some large institutions, has been invested into these companies. Multiples have increased. So I think in many cases it is unreasonable to think that you will get similar share price CAGRs in the next 10 years as you did in the last, just because, as I said, you probably shouldn't count on too much multiple expansions, at least on the group level. The companies that we cover, obviously, you can have opinions about specific companies. There are still some that could be cheap, but that's kind of the overall conclusion that I've come to.
Yeah, I that's a lot in line with what you posted in your last report. I saw that, and actually, when even though valuation is my last step, I focus much more on or at least try to focus much more on assessing the quality of the business and the management. I actually try to do an exercise just to know where I stand, and so usually, I don't feel that comfortable penciling in like a super high multiple. So usually, I try to be more conservative and apply what you say, which is underwriting some multiple contraction, just to give you that margin of safety, so to
Right.
speak. Um, and you also talked about how these companies actually acquire small businesses that are market leaders in their niches. And that's an interesting proposition. Obviously, you get inherent moats around these businesses. Um, but I'm curious to know whether you think people actually underestimate or overestimate the runway they may have, because as seen in the REQ paper on serial acquirers, I pull out the numbers because I don't know it by head, but there are supposedly 23.5 million small and medium-sized businesses in Europe, and I was wondering whether this figure might be misleading, because obviously not all of these businesses operate in small niches and are market leaders. So how many or like can you estimate a bit which of these businesses are actually potential acquisitions for these serial acquirers? And as competition increases, do you think the returns of the really high quality serial acquirers might be affected over time? And will they reach a point where they run out of acquisitions just because of the competition they face? That's something I try to question myself, because it's obviously really easy to convince yourself that this is a perfect model, and so applying a bit the scientific method, I'm trying to uh, know whether that's a true proposition, or yeah. So
Right.
you could give your take on that.
Sure. So I think the number of businesses probably isn't gonna be isn't gonna be a bottleneck. As you said, there is this 24 million figure for SMEs in Europe. I would say, if you want to be conservative, let's say around 1% of these businesses are like attractive niche companies that still acquirers who want to purchase. That's 240 to 240,000 businesses. Now, obviously, none of them are going to be for sale all the time. Also, like which companies different serial acquirers want to buy kind of differs. For example, some companies have kind of an industrial focus, some are rather agnostic, some focus on landscaping, for example. But in general, I think even the larger Swedish ones, I think investors can get a little bit biased when it comes to, they're already large. When it comes to, for example, Lifco, I think they have like around 220, 230 subsidiaries right now. It sounds like a lot, but just in terms of number of businesses that they can add, I think the runway is pretty long. When it comes to valuations, obviously the serial acquirer model has become more popular not only in Sweden in recent years. You've also seen a lot in the UK. You've even seen some in, for example, Germany and Italy. And even like a lot of or several like private equity firms, in some cases have started to adopt a similar model. For example, Visma, which is still private, it's been private equity owned for a long time, and that kind of diverged from the typical private equity model where you own a company for 5 to 7 years. I think, if I remember correctly, it was HG who owned Visma for like around 20 years right now. So all of that to say that yes, competition for acquisitions is increasing. Some actors are willing to pay higher multiples. When it comes to the highest quality serial acquirers, on the one hand, they are often preferred buyers. They have a good reputation. If a buyer is kind of unsure, should I sell to, for example, Lifco? I think at a certain point, they don't need to try to convince the seller. They can just tell the seller, all right, you can call like three, four, five of our subsidiaries who kind of in similar businesses and let them tell you that kind of the experience. So they have kind of this good reputation. Um, what I think is potentially going to be a bottleneck is like organizational capacity for M&A. For the larger ones, also financial capacity, um, or well, let me rephrase that. I think for the larger ones, it's primarily going to be organizational capacity, not financial capacity, and then also the evaluation discipline. Because what you see with, for example, Lifco, they've done 18 acquisitions in 2023, and nonetheless, they have quite conservative leverage. And on the one hand, that kind of depends on, in any given year in the short term, how many companies are for sale right now. Maybe you just don't see a lot of attractive companies at the right valuation. So for the larger ones, although they have always maintained pretty conservative leverage, I think recently we've seen that the organizational capacity to both like find M&A targets, close M&A deals, and assimilate them into the organization kind of starts to exceed their financial capacity. And the high quality ones, they have pretty strong valuation discipline. So in times when a lot of other actors are willing to pay higher multiples, I think a lot of the higher quality serial acquirers are disciplined enough to say, all right, we're gonna let's say focus on reducing leverage a little bit in the short term, instead of trying to pay up, which reduces kind of your returns on M&A, right? So I think it's going to go through cycles. When you look at, for example, my estimates for Lifco VTech, I try to have an educated estimate of what they're going to acquire in the future. And in my estimates, it looks pretty smooth, just because my educated guess represents an average over time, what I think they can do, both organizationally and also from a balance sheet perspective. But in reality, it won't be that smooth, just because in certain periods they may find more acquisitions. In certain periods, they will find less acquisitions. So, in summary, I would say competition could definitely be a factor. Although, given like the sheer number of companies, I think even the largest Swedish serial acquirers still have significant runway to grow, just because they don't run into each other as often as you would think. And then, in terms of organizational capacity, I think that's going to be the main bottleneck for companies that want to move from, for example, 5 to 10 acquisitions per year to significantly above, let's say, 20.
Yeah, that's really interesting, and um, the track record actually tells you a lot about these businesses. For example, Lifco, even though they say we have been slow at growing our M&A capacity, they still have grown at a fast clip. So, but they've proven that they can scale the M&A, and they also have proven that they can transition from one CEO to another in a pretty smooth way. Um, So yeah, Lifco is objectively one of the greatest ones out there. But for the people that are trying to find these serial acquirers when they are smaller, because obviously that potentially implies a bigger runway, especially if they are well managed. We have examples like Teqnion that I think they are under 400 million, maybe 300 million market cap in euros or dollars. So I was wondering whether you think it's reasonable to try to find these serial acquirers when they are smaller, and how would you go about assessing the quality of their management given the shorter track record and the uncertainty on whether they can be disciplined and in their acquisitions, and whether they can scale that, because obviously it has been done so far, so it's not a physical limit or limitation. It's more of a qualitative limit, and so I was wondering how you think about that, and what tips you can give for people that are looking for small serial acquirers that have a lot of room to grow and maybe are more obscure and not so well known.
Sure. So I think it's it can definitely be a very fruitful investment strategy to kind of search for smaller serial acquirers. I think the main thing to keep in mind is that beware of survivorship bias, right? If you look at small serial acquirers, it's really easy to think, all right, they're just going to buy companies in like 20 years, they're the next Lifco.
Yeah,
I think where Lifco at Teqnion succeeded, a lot of other companies have failed. Especially like I'm not like a huge expert on like the early stories, but when you're still small and you're reliant on one or a few subsidiaries, like sometimes things can go wrong just due to bad luck, right? And then the larger you grow, the more diversified you grow, the more you like refine your strategy, the smoother things are going to become. So when it comes to smaller serial acquirers, obviously they're kind of two different categories. In the last 10 years, a lot of new serial acquirers have been started, and making a call in terms of investing at inception, there is like 100% people, right? And then there are, for example, Teqnion and other small ones, which have already been in the game for 10 or 20 years. So they have some track record, but people obviously still a lot more important, especially because when you're still smaller, you don't need that many acquisitions per year to have a pretty solid acquired growth. And what happens a lot in these companies is that responsibility for at least smaller M&A hasn't been delegated that much to business units or subsidiaries, etc. So the M&A is pretty much a function of a couple people at in like management, for example. So like trusting them as capital allocators is essential. And for me personally, my personal investment philosophy is a little bit more, risk averse and kind of limiting the downside. So I think I personally probably wouldn't invest in too many completely new serial acquirers. Obviously, there could be exceptions. For example, I guess you heard about Draco, which the previous CEO of Lifco for 20 years, where he calls on started. You can probably trust like that kind of person, but I usually focus on ones that at least have, let's say, 5 to 10 years of track record. You can talk to them, although I think we've partly contributed to that. Like nowadays, most CEOs actually know what to say.
yeah,
So it's actually, as you mentioned, track record. You want to see that they're actually doing the right thing, not just saying the right thing. Um, and if you have 10 years, I think that's a pretty good indicator. But as I already mentioned, as you go from, let's say, 5 or 10 acquisitions per year to 20 or more, you want to see the right organizational changes. So if you talk to a CEO and he or she's basically like, yeah, I'm doing all the acquisitions. I don't delegate anything to business units or whatever. I think that's pretty quickly going to become an organizational bottleneck for M&A, and that might limit how much they can scale the serial acquirer model. Um, So, I don't think there's right or wrong when it comes to investing in the larger ones or the smaller ones, especially because at least the Swedish ones, in relation to the total number of companies that they could buy, they're not that large. But you should just be aware of what you're doing. If you invest in the younger and the less proven a given serial acquirer or a team behind a serial acquirer is, the larger the risk you're taking. And if you invest in the large ones, they will probably continue to execute their strategy. But you probably shouldn't expect anything stellar in terms of, all right, they're going to grow super quickly. You got a 10 bagger in 3 years. It's not going to happen, probably. Um, they will probably be pretty stable, at least in terms of their earnings development. Obviously, even like Lifco or Attic, etc., had a pretty negative organic growth in the most recent quarter. So there are going to be some swings, but they're absolutely not going to be the same as in like a really small company. Um, and as the market appreciates that, I think you can pretty much count on them, uh, or like you can count on the return on the share approximately being earnings growth plus minus any multiple expansion or contraction. Um, but I kind of understand the allure of investing in like the really small ones. But as I said, beware of the risk.
Right. Makes sense. And actually, you mentioned Lifco's former CEO, and we already talked a bit about the transition. At least I did. So I'm really curious to know what are your thoughts on that transition, especially since I'm a shareholder. Um, I, I shouldn't say this, but obviously now I said it. So I'm a shareholder, like for less than 2 years, maybe. So I wasn't a shareholder at that time, and I'm curious to know what you think about that transition, and how interesting is it that someone is fired so quickly over a bonus thing, I think. So I'm curious to know your thoughts on that, and then speaking about Teqnion, which is also a company I follow closely. Um, what do you think about all this, the CFO transitions and CFOs leaving and coming and so on? So, how should investors, or how do you think about that in specific terms?
Right. So when it comes to Lifco, I don't know more than what was reported in the newspapers. It was a seeming dispute over I think it was variable pay, but obviously it kind of wasn't planned because it happened pretty sudden, right? So I think the fact that basically Per Valdemarsson immediately replaced Fredrik Karlsson, and the company still continued to perform, is kind of a testament to the decentralization decreasing the risk of decreasing like key person risk. At the same time, I think, for example, Lifco only shows like I think 3 people in their top management. I think like the bench of group managers and other managers that could kind of hop in is a lot wider than kind of that list would suggest, so to speak. So I think they're pretty good at succession planning, even though a lot of these people aren't visible to the outside. When it comes to Teqnion, at least the CFO changes, I don't have any proprietary insight in terms of, right, this person quit because of that. Obviously, if you would like not know the company, not know the name, and you would just hear there've been 3 or 4 CEO changes, you would at least want to double check, right? Because when it comes to a CFO leaving, maybe they just don't like their job, but a lot of people would also kind of start maybe suspecting that something isn't right. I don't think it's the case in Teqnion based on everything that I've heard about them. I think they want to do the right thing, but obviously you want to have a little bit more stability in terms of who's at the helm, and that I mean that's also been the case when it comes to Teqnion. I mean the CEO has been the same. Several key people have been the same. So maybe that they were just unlucky in terms of finding the right person for that specific role, right?
Right. It makes sense. And actually, now I was thinking about also the situation where Daniel Zhang sold some shares, and then Johan gave him lend him shares and so on. So how should investors think about those situations too? Because obviously, with those smaller serial acquirers, you kind of see some mistakes that are reasonable to do when you're starting out and when you are small and so on, but they can scare a lot of people that actually don't know the business that well. And so uh, it was funny to see how everyone was commenting like nice stuff about the management and how great they were as managing the business and so on. And then all of a sudden, like they released the report and everyone is like panicking and so on. So I was commenting this with a friend the other day, and we were just laughing because of uh, how we saw from firsthand how the market can react to this kind of news. So, firstly, I would like to know your thoughts on that specific situation, and secondly, on how you go about thinking through these, let's say, more short-term developments, because obviously over the long run, if everything plays out well, this would be relevant. But we still can't dismiss this information because it's new information that's coming out, and so you have to process that and assess whether that's relevant or not. So yeah, I would like to know your thoughts on that.
Yeah, I think that particular incident was mostly poor timing, I would say. I mean, if you just look at the facts before and after, um, Daniel Chang is probably a lot more incentivized to deliver value now, right? Because he owns a lot more shares. I think just in terms of the timing of when different pieces of information were released, it was kind of unfortunate. And obviously, you don't want to see like insider sales. So I'm sure there would have been certain ways that could have led to this being kind of a being more smoothly communicated. And when it comes to swings, I think in that specific case, one problem may be that my general feeling has been that a lot of small investors have kind of followed other more well-known investors into Teqnion, maybe without doing like super deep due diligence, so to speak. And if it's Teqnion or any other company, if you just follow someone else into a stock, as soon as there may be some negative or confusing news, you can become quite confused, right? And So I think that's kind of what happened in terms of a lot of people didn't really know um, what to think about that. Obviously, you never want to see insider sales, but irrespectively, um, if you just look at the underlying business value, did it change that much during those 3 days, or like even especially during that Monday after they released their report? It probably didn't change that much. It was just people's opinion about what the stock is worth, or what they want to pay for it, so to speak. So I think like you can basically mitigate that, at least if that's your style, in terms of doing your own due diligence, coming to your own conclusions. And that obviously doesn't mean that you need to like find all your ideas yourself. Just be sure that you really understand the business and that you have your own opinion about what it is worth. I think, at least in my perspective, this was kind of an isolated incident. In general, the management of Teqnion, in my eyes, seems to be really trustworthy. They want to do the right thing. I think this was pretty unfortunate, but obviously, you would become kind of suspicious if things like that are going to happen all the time, right?
Right. That's quite interesting, and yeah, obviously I felt much more. I didn't feel all that panic and noise because I just knew that first of all, I think they are high quality people, and then second of all, I had done I have put a lot of hours into researching the underlying subsidiaries and so on, and I don't think the operating companies changed that much within those 3 days that that you could justify those swings and so on in the stock price. And it's really funny to see it firsthand, because you read it on the books that Mr. Market and so on is crazy and blah blah, but then you see it firsthand, and it's interesting to observe how human behavior plays a role in investing and so on. So
I would say what I would add there is that when it comes to valuing serial acquirers, there are obviously two sides of the thesis, right? It's existing subsidiaries, and then future M&A.
right,
Because if you look at a lot of serial acquirers, if they would never do any additional M&A, they probably wouldn't trade at EV/EBITDA 25, right?
that's right.
In general, I think as we talked about, the underlying value of subsidiaries doesn't change that much. But obviously, the key capital allocators in the organization are key to create future value, do good acquisitions, have like a good organization to take care of existing subsidiaries. The premium multiple that a lot of serial acquirers get um, obviously depends on their capital allocation abilities. And from that perspective, it's obviously very important to trust management. And if things repeatedly happen that kind of make it hard to trust management, that will probably lead to some stocks becoming cheaper, maybe or maybe not, rightfully so.
Yeah, that's right. And yeah, obviously you're valuing the future growth and the future streams of cash, and so the business aren't static, and that plays a role. But yeah, it's really important to I guess get the picture of both the present and the future. And it's perfectly rational if you see repeated incidents like these ones to have a suspicion about the management. And as you said, the management is key and for the future allocation of capital. And so it's not a totally irrational reaction, but I guess that it was a bit exaggerated. That was what I was trying to say.
Right.
um, Anyways, to wrap up, I wanted to ask you a last question on serial acquirers, if that's okay, and then two more, say, philosophical or practical life related questions.
Sure.
Could we jump on them?
Sure.
Okay, perfect. So I would like to play this mental exercise with you, and this is on the serial acquirer question. Um, for example, let's just speak two companies that we have talked a lot about in this conversation, Teqnion and Lifco. If in 10 years' time those companies don't exist, why do you think that? What do you think happened? And yeah, maybe you could build a separate case for each one of those, because if both cease to exist, maybe something happened to Sweden or anything like
Right.
that. But yeah, it just in separate spaces.
So in general, I would say, obviously you could always uh, choose the easy way out and just say, all right, maybe they over leverage and the economy is going to crash and they're going to go bankrupt. I think that is extremely unlikely, just because, even Teqnion, which is a lot smaller than Lifco, is quite diversified across companies, now increasingly also across countries, right? So even though, maybe in a worst case scenario, like one or a couple of subsidiaries may actually go bankrupt, even though like even that scenario is kind of unlikely. So I think the main reason why they wouldn't exist in 10 years, and that may be more applicable to Lifco, is because they maybe choose to kind of spin off or break up or whatever. I don't think that's super likely, but that's one of these scenarios that I could imagine. As for example Bergman and Beving did in the early 2000s. Um, AdTech and Lagercrantz are both spin-offs from the Bergman and Beving mothership. They were spun out, I think, in 2001. And then, interestingly enough, AdLife was spun out of AdTech in 2016, I believe. And Momentum Group and what's today known as Aligo were spun out of Bergman and Beving just in recent years. So I think in some ways, once a serial acquirer grows larger, you can kind of potentially motivate some spin-offs. So depending on how hard you want to, interpret they don't exist anymore in 10 years, I think the most likely scenario would probably be, breaking the larger ones up in some way. I'm not sure whether it's actually going to be rational, just because if you at least take them at their word that they were decentralized, if you have, like, for example, Lifco, it has dental demolition and tools and system solutions. Um, if those operate as pretty independent entities, having them as separate companies is not going to be that much of a practical difference, right? A less likely scenario would be for one of them to be bought up. I think that's really unlikely just because both have strong major owners. I mean, in Lifco's case, you have Carl Bennett, who owns like I think 50% of the vote, the capital, and 69% of the votes, if I don't misremember.
Yeah.
So if he doesn't want to sell, it's not going to happen, right? Interestingly enough, he took Lifco private in, I think it was 2000, right? So if we really see like a gigantic market crash, I could see the valuations be like becoming attractive, and maybe some of them are going to be bought out. But given the strong owners, I think it's pretty unlikely. So I think the major risk is not going to be are they not going to exist in 10 years. It's more, all right, are they going to do a good job in compounding earnings, or are they going to not grow earnings very much?
Right. Yeah. Yeah. It's an hard exercise because when you see such a great track record and everything looks right, and so it's hard to to find out a reason why they would cease to exist, and without going to the general things that, like I said, like too much leverage or management dies and so on. So
Right.
yeah, that's really quite interesting. And so now jumping on the, I actually have a small tangent to this question, and it's really easy to answer. I was wondering whether you know of any cases where a Lifco subsidiary has gone bankrupt or anything like that, because I haven't found any evidence of that, but I do know that they did some divestments because of Ukraine war and some other things. But how often does that happen, if any?
Yes, I'm also not aware of any case where, for example, a subsidiary has gone bankrupt. I guess in some cases, if a subsidiary underperforms or they're really small or whatever, maybe you'll decide to merge them with like a related subsidiary. But um, I'm also only aware of like the two divestments. I'm actually not sure what the first divestment. I think it was in 2014, a while ago, anyways.
Okay.
They divested, I think, two subsidiaries, and then recently, I think they divested Hecotech, which had a lot of sales to Russia, which kind of became impractical after the Ukraine war started. Um, so I think it's kind of a testament for the high quality serial acquirers, especially once they start to get going and become a little bit more successful. I think their bar for what companies they want to acquire usually doesn't get lowered, and these high quality businesses usually don't just go bankrupt. Especially because I don't think, in most cases, I don't think serial acquirers leverage aggressively on a subsidiary level. There may be some that, but I think for the most part, it's kind of the mothership, so to speak. So I'm actually not aware.
Okay, cool. That was actually a question from a friend, so I had to ask it. So now going into the more general life advice, I would really be curious to know whether what's your system or how do you deal with emotions such as being overwhelmed or feeling unfocused. If it helps, like what questions do you ask yourself, and what do you specifically do? Say you are doing research and you feel really unfocused and you want to get back to focus and so on. And more in general, like if you for extended periods of time, what do you what strategies do you apply?
Sure. So I think one thing that kind of helps me is that I really like, working out, going to the gym or going for a run or whatever. I think especially, or yeah, I think it's not intuitive, but especially in times of work being really stressful, it becomes even more important just because it kind of helps me, center and ground myself, and being able to kind of focus at work, for example. Also, in really intense periods, that usually happens. Maybe during earnings season, I'm also working on an initiation of coverage, or something. I also like work on another project. So a lot of stuff with tight deadlines. I think what helps me is that, what I always try to keep a long-term perspective in periods like that. Each day I try to focus on getting the stuff done, uh, that like is required that day, so to speak. So not thinking about, all right, this is all the work I need to do in the coming year.
Yeah,
It's more like once you know what to do, each day, you just go in and you focus on getting the work for that day done. And over time, that's going to accumulate, right? Because I think it's, a lot of people, they usually just say, oh, I'm long term oriented. But you need to remember that to get to the long term, you need to go through a lot of short terms, stacked right behind each other, right? And sometimes I think being able to just focus on what you need to do right now kind of frees you up, from thinking about, all right, this is all the stuff I need to do. And because, this is common saying in terms of people overestimate how much they can do in the short term, but they underestimate how much they can do in the long term. And I think that's pretty true because the secret in a lot of cases, at least if you're reasonably confident that you've chosen the right path, is to just put in the work day after day. And if you just keep doing that in the long term, it's probably going to turn out right, all right for you.
yeah, that's really cool. And I got this saying, I don't know from where. Maybe I'm paraphrasing, but it's like you should live in day-tight compartments. So like you have like you think in compartments and you have like your day, and if you just go through that, it's not that hard, obviously. You can stand things for 12 hours that maybe you couldn't stand for your whole life. And so yeah, I think that's actually great advice and a really practical thing for everyone, really, like students or anyone like already working and so on. So thank you for that one. And to wrap up, this is a more personal question, so feel comfortable to say if you don't want to answer it. But I was wondering, what were the biggest adversities you faced so far, and what lessons did you learn from those?
Yeah, I would say in general, I hadn't faced any huge adversities. There have been some minor ones. For example, I really like working out. Once I had like a really bad knee injury, so I basically couldn't like bend my knee for 3 months or something. And as kind of training is my way of grounding myself, that obviously affected how I was feeling in general. So what I've kind of learned from that is that, it's important to appreciate the small things in life, right? Most people almost think of it like a chore to go to the gym or whatever.
Right.
After like some kind of injury, you maybe appreciate that as like something really nice to do, so to speak. But also, that kind of question reminded me of, there have been like different adversities in my life when it comes to, as like a child in preschool, I was like quite obese or something, and some children bullied me or something. But in general, I was really fortunate because there weren't ever any structural setbacks for me. Even though, for example, I was born lower middle class, I was born in Germany, right? So automatically,
Yeah.
as soon as you're born in Germany, you're born into the richest 10% of all the people in the world, right? So for the most part, the only thing that has limited me, like all my life, is basically, how much I want to work, how much work I want to put in. Um, Obviously, there's always a luck component as well, if when it comes to success. It's both hard work and luck in terms of being at the right place at the right time, etc. But I think it was Charlie Munger who said, you should never interrupt compounding unnecessarily if you don't have any huge adversities that are kind of caused by an external factor in your life. You can kind of keep compounding your skills and your progress, which I'm really fortunate for.
Yeah, that's amazing. And obviously there are people that have gone through a lot of adversities, but it's also interesting to learn from the smaller ones, and I guess those ones also prepare us uh, for whatever comes. And so thank you for sharing that. And we are both really lucky. Just quick moment for gratitude. We are both pretty lucky to be born in Europe, and yeah, just being able to do what we like and so on. I guess that's right for you too.
For sure.
So yeah, it was a wonderful conversation, and since I know you have better things to do, I don't want to lock you in too much more time. So thank you so much for accepting this invitation, and I hope we keep in touch in the future, because I really enjoyed our conversation and how you shared your insights. So thank you.
Definitely. Thank you so much. I had a great time.